Okay, we are actually streaming online. We're streaming online on YouTube and still recorded too. But what I will always advise so many persons will feel, okay, the meeting is recorded and I'll go to the YouTube class, YouTube video to watch. Well, in as much as I'm not against that, but it's better you be in class because the one-on-one discussion is something you would not want to miss, to be very candid. You will not want to miss because the question and answer, you're seeing your instructor and he's talking to you. You're asking him questions. It's a good one, something you can understand. You're asking to us to learn. It's better off than watching the video. You watch the video and at a point you feel like, I want to ask a question, but there's nobody for you to ask questions. And at that point, you are subsumed in what you know or what you don't know. So I think attending the class is very important so that if there are some little silent points you did not get, then you can do the YouTube video. Sorry, go to the video and update yourself. That's fine. That okay. All right, so let's proceed. Let's proceed. Today we are discussing. We'll be spending 1 hour 30 minutes talking about. I want to start with what is called, because so many traders, the challenge they're having is simply put, where am I to buy? Where am I to sell? The two things, please listen if you are new, if you just finished, graduated from a basic class, now you've just entered intermediate, please, you need to pay rapt attention because this is the Zini has given you the bedrock of Forex, which is the foundation. But you need, with that knowledge, you will want to build on that knowledge what you've gotten in basic. But what you got in basic is just like somebody that is drinking milk, a little child that is drinking milk, that is being breastfed by the mom, taking milk. And after that, when the child is grown up a little, start giving him some solid food gradually, not giving him, at once giving him gari or eba or yam, no. They'll take it easy. Okay, let's try something soft, not like the milk, but something a little bit thick. After that, okay, let's give him this. And after that, you start giving him bone. Start giving him bone to chew. Because it will get to a point in this course, in this class, we will be chewing bone. But that's not to tell you to get discouraged or to be scared. That's not my intention. My intention is for you to understand that you're just moving from one stage to the other stage. And this stage, you need to pay rapt attention because this is where you want to buy. This is where you, at this point, you should be thinking of funding an account. If you want to take trading as a career, you need to fund an account and trade it. And one thing we do here, we are not charity organization. Let me make this thing very clear. We are not charity organization. Forex is not free of charge. That is a simple truth. It's a very hard truth people don't like. Forex is not free of charge. Anybody that tells you he's going to teach you Forex free of charge, ask the person to show you the content of what they want to tell you. This guy might just tell you, give you the basics, but the basics, you agree with me, is not like what Ezine did. It's not like what we gave you in that 1 week when you were in basic class. Give you the rudiment, the nitty-gritty of Forex. So that if you pay more attention, you will have understood everything you need to know in the basic. And now we're going to the next level where we're going to teach you the technical analysis. Technical analysis where we'll be dissecting the chart. We'll be looking at the chart and trying to know where we're going to buy and where we're going to sell. All these things are not free, to be very candid. The truth of the matter is that the brokerage firm, FSPs, has paid for this service. They have paid for this service. And that is why we're doing this. And what you pay them in return is that you will trade with their brokerage firm. You trade with a first place. That is what you need to do to us. Because they say, look at the terms of agreement. Teach these persons so that they open a life account with FSPs and trade with FSPs. That is the terms of agreement. So our work is to come teach you everything you need to know. At least 99% of what you need to know. I don't like talking about 100%, but 100% is God. 99% of what you need to know in the Forex market. Once we have taught you that, now it is for you now to say, okay, I want to trade, because you definitely will want to trade with the Forex, with the broker. You're not trading, you're not entering the market directly. No, you need a broker. And that's why they say they have come to assist you in the financial market. And what you need to do is fund your life account with FSPs and trade with them. That is what we need to do. And if you're not considering that, start considering it as we delve into the intermediate class, because this is a very important class which you will not even expect or allow your enemy to miss. It's very important. So today, so many persons have the problem. What we do in this business is two things. We do two things. Only two things. That's what we do. What we do is that we buy, we sell, finish. It's a business. It's not gambling. We buy, we sell. And now the question is, when people look at the chart, the question they keep asking is, this chart is so confusing. You see candlestick everywhere, scattered everywhere. Now, what comes to the heart mind is, where am I? Say you say we should buy. Where am I to buy? You say we should sell. Where am I supposed to sell? If I have bought, where am I supposed to sell? And what time am I supposed to buy or sell? The beauty of this business is that whether you're buying or you're selling, if you are on the track and you know what you're doing, you'll be making money, you'll be making profit, you'll be making cash in dollars, every day, if you so desire. But I assure you that in a week, you will make money. Even if you enter the market for one day, possibly you enter the market and the market is giving you what they call drawdown, as you are in negative. Before, if you understand how to analyze this chart, before the week runs out, over 2 or 3 days, you will see that your profit will turn to that your negative will turn to positive. But there are instances where you just have to close the trade in loss. You just have to close the trade in loss. What we're telling you is that we're not saying you will not make a loss in this business. So many Forex traders will tell you, you're going to make money, you're going to make profit, without telling you make loss. No, that's not what we're doing. That's not our aim. You will make loss in this business. But if you understand what we teach you, your profit will outweigh your loss. Mark it somewhere. Your profit will outweigh your loss. You can enter a trade. The first trade, you lose $2. The next trade, you lose $5, which is $7. The third one, you lose $10, which is $17. The fourth one, you lose, let's say, $8. 14 plus 8 is what? 14 plus 8 is 22. 14 plus 8 is 22 years. That's $22 cumulatively. But the next trade you will enter will give you a profit of $50. Now, subtract $50 from 22. You are still afloat in the market. You've made up to $28. That means you have made money at the end of the day, even if you had loss. So that's what we teach you in this business. So as to make profit consistently, even if you lose, at least cumulatively, see what you with the week. If you look at your business, it's okay, I made a loss of $50 and I made a profit of $150. You're still on top of the business, you're still afloat, you're still making money. So don't get it twisted. When people out there tell you, they make money, they make money, forget it. When persons I might be telling you that may not actually be making like they pronounce. But let's understand that we need to tell ourselves truth in the business. The business can pay your bills. Yes, and yes, and correct. Okay, we will go further. What we're teaching today now, what we're discussing today is support and resistance. Ezine have discussed that in the basic class, but why support and resistance is a recurring decimal is because it is very pivotal in your success in trading. It is very pivotal in your success in trading. That is why you will always hear that word, support and resistance, frequently all through your duration in this Forex trading. So just sit back and ensure that you always hear that statement and make it your friend. Make it your friend. Support and resistance is very, very important. Okay, now let's move. Now, what is a support? What is a support? What is a resistance? What is a support? What is a resistance? The last class, the last intermediate class I took, I actually started the class with what they call the 4 native levels of price. 4 native levels of price. And I observed that because they were coming from, some persons were not they were new in the Forex business or Forex world, they did not grasp that early enough. So this time, I said, I will teach you support and resistance. And after that, we'll go to what is called the native levels of price. Native levels of price, we'll come to that, possibly tomorrow or so. But today, I will teach you support and resistance. I will go to trend line. By the time we are done with that for today, hopefully, then tomorrow we'll now, okay, no, not tomorrow. Tomorrow will be for basic. Tomorrow is Thursday. Okay, tomorrow is Friday.
Friday.
Yeah, tomorrow is Friday, yes. So on Monday, good, on Monday, so that you have time to digest support and resistance. So that if I'm talking about native levels, you will not get it twisted. You will not get lost. So by Monday, we'll be dissecting the chart, discussing native levels of price. And that native levels of price is where price have the high potential that is devoid of mathematical sentiment, that is devoid of what's it called again? That's devoid of psychology. You just have to draw your native level. Where you draw your native level should be the same place where I have my native level. It's not like support and resistance that is subjective. You just draw your support and resistance. You say, let me take it up a little. No, let me put it at the weak. Let me put it on the body. Let me do this. People get distracted. People, it's subjective support and resistance. But you see that native levels of price, where I have my own native levels of price, that is where you have your own native level of price, unless you don't know what to do. And as we draw that native level of price, we'll see price when it comes to those levels and what happens to price. We have so much to discuss, to tell you. By tomorrow, I don't know, I think Ezine forgot to paste the course outline. We'll give you the course outline by tomorrow. We'll have packages for you. So sit back and relax. If it is network that is your problem, look for a network that is good in your location. A network that is good in your location. They are using MTN, and MTN is not good before now. Go and buy 9 Mobile. Check, ask anybody which network is good for streaming online. Even if it means go and get an Airtel, if it is good in your location, get it. Because you cannot stand to miss what we are about to dish out to you. Now, when we say support, support is like, look at your room now, where you are now, where you're seated or where you're standing, listening to me. There is something where you are standing that is making you not to go down. That place is either you're in a bus, that you are in a car, you are not on the ground as the car is moving, as you're listening to me. That place where you're sitting or you're standing is your support. Now, when you stand up from where you are and you jump, either even if you're in a bus or a car, you jump, you agree with me that your head will hit somewhere. And that place is the roof of that car. Even if you're in your house, you will see that once you jump up, you will hit the roof of your room. Or when you look up, you see the roof. Where you are standing or sitting is a support that is not allowing you to go down further. Where you're looking up is your resistance. So when you have a support, take for example, you are staying in a one-story building. You're staying in one. I'm trying to lay the background so that we have a better understanding before we go to the chart and the slide. If you are staying in a one-story building, you have the ground floor, you climb the staircase, you go upstairs and stay there. Now look at it. The man that is downstairs, his support is the ground. As the man is sitting on the ground, he fears no evil. Now, the next place is the resistance, which is the roof, either the decking, if it's a one-story building. The decking, the slab, the decking up is his resistance. Now, when this man moves from that his previous location, now he climbs the staircase up and go to the first floor. You will agree with me that once he climbs and enters the room, the first floor, he has changed his location. He has changed his level. He is no longer downstairs, but he is upstairs. If you want to say it, he is upstairs. Now, his former resistance has now turned to a support. I want to believe you are understanding me. His former resistance, which was the slab or the decking, he has moved, he has changed level. And that decking is now his support. That former resistance has now turned to a support. He now has a new support and a new resistance. If it is a two-story building, by the time the person moves to the next level, where the man calls his resistance, the one on the first floor, where he calls his resistance, is now the support of the person in the second floor. Now the person now have a new resistance. If you have this mindset, if you understand this concept I have painted, please on the chat box type 1. Let me see if people are following. On the chat box, if you understand this concept very well, type 1. Okay? Okay, people are typing 1. Okay. So that means majority of us understood this concept because I've not seen anybody that type 2. Good. But okay, let me say, if you don't understand the type 2, if you don't understand the concept type 2, Anyanwu Michael, okay? Okay, only Anyanwu Michael. Okay. Anyanwu Michael, I will want you to unmute and tell me where you do not understand, where we got you meet, where we left you behind. Where is Anyanwu Michael? I want to please unmute your mic and tell me where we left you so that we can come from there.
Yes, you left me. You were explaining about the concept of support and resistance.
The what?
Exactly when you explain when you were. When you were explaining about it, I was having a little issues too. I couldn't get your explanation on that. Because I just need to come and grasp.
Okay, Mr. Anyanwu, do you stay in a bungalow or you stay in a one-bedroom? A story building.
In a story. In a bungalow.
You stay in a story building. In a bungalow.
In a bungalow.
Okay, so Mr. Anyanwu, when you enter your house, your support is that place where you stand. That ground floor is your support. Your resistance is your roof. Mr. Anyanwu, please don't allow your children distract you so that we'll continue. where you're standing is your support. Above you is your resistance. That is what I have just said. Then I said somebody that is staying in the one-story building, if the person leaves that ground floor and climb the staircase and go upstairs, he has just changed his location. That his former, where you call, Mr. Anya, where you call your resistance is now his support. Is now his support. He now have a new support and a new resistance. That is what we say. That is what we say when we said that coming on.
So don't worry, continue. I'm replying to them.
Okay, so that place where you call your support, when the person moves to the next level, climbs the staircase, now it has changed his support. His former resistance will now turn to his support. And he now have a new resistance. That is what happens on the chart. Now let us go to our slide. Okay, now we said, what is a support? A support and resistance is one of the most widely followed technical analysis techniques in the financial market. It is a simple method to analyze a chart quickly to determine 3 points of interest to a trader. One, the direction of the market. Support helps you to know the direction of the market. Two, timing and entry in the market. Where am I to enter? Support and resistance is where you enter for a buy at the support and enter for a sell at the resistance. Another third thing is that it establishes points to exit the market at either a profit or loss. I will actually not go through all of these story. This manual is ready for you. We'll have this. In fact, this intermediate manual, I feel for the last intermediate class, we have to build on some of the lapses. We have prepared a detailed intermediate slide for you. You need to go and get it in detailed intermediate slide. It is over 100 pages. All the thing will take you on intermediate. In fact, if you get this, you have gotten a Forex book, because it is not like what you see out there. It is what we, based on chart experience, we have years of chart experience, and we've prepared this and put it in a slide form so that you can go and read and go get what we're talking about. Okay, now, this is a chart representation of support. Look at support. At this point, if you look at this point here, look at this point. At this point, look at my cursor. At this point. Oh, sorry. Are you serious? Oh, forgive me, please. I actually thought I was sharing with you. Okay, I said this slide is ready for those ones that are interested. But if you ask me, brother, this is what you need, so that when you stay after a course, you can go and digest it, read what is written there based on chart experience, not what you see out there. Okay, now this is the chart representation of support. Look at this one on the right. Look at where my cursor is. Where my cursor is. Now, look at when we say support. Look at a support. This is a support. When we say support, we say where there are multiple touches of price and price did not break below. Multiple touches of price. What it means is that the price will come to that level or that zone, because we say it's a zone, not a line. It's a zone. A zone could just be within a range. We say price will come to that point. It will bounce up at a support. It will come again at a later time. It will bounce. It will come again at a later date. It will bounce. It will come again at a later. So the question is, what is that? What is responsible within that particular zone that is making price? When it gets to that point, it will reverse. What is it? Now, what it means is that when you have identified this zone, what you will do is that you are waiting for the price again to come to that zone. When it comes to that zone, you'll be looking for opportunity to buy. That is what we mean. So when you go to your chart, identify that zone, that level, where you have touches of price touch. What we're talking about is price. That's the candlestick comes there. At that particular price, look at price is what you have on the right. We'll go to the main charts, don't worry. That place where you have the chart, where you have the price came, let's take for example, on a daily time frame. When I say daily time frame, you understand what I'm talking about. Price came today. It came to that price. Let's say 500. Price came there. It bounced up. Started increasing in price. When it got to 500, it moved 501, 502, 503, 504. Now go to like 700. Started coming down again. Get back to 500. The market bounced again. Started moving up. Now it moved to 600. It did not get to 700. Came back again to 500. Still bounced again. The question is, what is that spirit within that zone that is making it bounce? It is not a spirit, it is support. Mark that place as your support. What you need to do now is that you have just used previous price action. What has happened previously will help you to determine what will happen the next time. That is why we say this is not gambling. It is not Naira bet. What you are doing, you are analyzing future price based on past action of the price. Now you mark that zone as your resistance, sorry, your support. Now you tell yourself, if price comes to this zone again, I will buy. That is where you need to buy. Look at it. If you look at this arrow, market came here. That means in the past, market has been coming here. Market came here, you bought. That arrow is telling you opportunity to buy. It went up. It came again, it went up. It came again, it went up. The fourth time, it went up. As long as price continued to touch this zone and did not break it below, tells you that zone is a support. If you have identified this based on past action, what happens is that just mark that line and leave it. You have done your analysis. You have identified support, because by the time you open your chart now and say, I want to check the market, I want to trade, I want to buy or sell, the first thing you must do is to draw your support and resistance line. That is the first thing you will do. The first thing is to identify your support and resistance. Once you've identified your support and resistance, if price is on top of the price is on top of that line, any of the line you have drawn, if price is on top, it tells you that that's when we say the current price. Take note. Remember, you draw this your line based on past action. Once you have drawn it, you are waiting for the price, the current price, to come to that line. If the price comes to that line and it is on top of the line, it tells you it is a support. But if it is under the line, it tells you it is a resistance. That line you have drawn is serving as a resistance. Look at it. It's just like when I told you, this is the man that stays downstairs. This place is the man that stays downstairs. Now, this down is his support. This line here, this line is his resistance. This man that is upstairs, look at the first story building. The first story building. The man upstairs, this is his support. Now the market break down, came back to test it. Now the market is going down. The market is going down.
Chart.
Sorry?
We could barely see the chart. Please zoom it a little.
Is blood?
Just zoom it from your, touch your phone so that you can zoom it from your own, not you, Mr.
Please, if you're using phone, put your phone on rotate, as in slant it. If you're using phone, then you can zoom on your own. My chart is very zoomed. It's very clear. If you can't see it, if you're using phone, don't keep your phone straight like this. Slant your phone, slant it. Go to your setting and do rotate. Once it rotates, you hold it like you're holding a tablet. Then you'll be seeing the chart correctly, very well. Okay, now I said, look at it, it says, pull back to previous support, now acting like resistance. At this point, look at this point here, where the market, where you have the set, it's that is an opportunity for you to sell, because at this point where you have settled, this line or this zone is serving as a resistance. Why? The current price is under the line, is under that, what you call that, your support or resistance. Now it is resistance, but at this point it is serving as a support because price is on top of the line. Why here it is serving as a resistance? Because price is under the line. So at this point, this is your entry for a sell. It is your entry for a sell. Those people that will say, where am I to sell? Where am I to buy? When you draw this and price come back, if it has broken it and comes back to test it, now you have a smooth ride for a sell. So now, well, what I want to say now is on the chart. So sorry, on the slide, you can actually ask for your own slide and get it. Once so that you don't need to start writing and waste your time and start taking us back. What I'm saying is that the rule of support and resistance is that if a support is broken, it changes it to what? A resistance. What you need to do as a trader is not for you to sell immediately. No. You wait for that market to come back and test that zone again. And if it did not continue to buy, it tells you that that is a valid resistance. Then you should sell. You go to our chart and see this thing. So the first rule is that first, for you to say this thing is a support, there must be multiple touches of price, at least.
Please co-host me. Let me meet people.
Sorry? Okay, let me make you
let me meet.
Sorry. Yeah, you are now. I'm taking my time to explain this because the former persons that were former students that were that just finished their intermediate, they had to struggle with this. That's why I'm taking my time. But at the point, I think they were able to catch up and continue. But I wouldn't want you to pass through the stress. That's why I'm taking my time to explain this. I can take the whole of the class today, teaching support and resistance, because you will hear me throughout the intermediate class telling you about support and resistance, support and resistance, support. It is so important that somebody wants to come from Asaba just to come and learn physically support and resistance. That's to tell you how important it is. So if you have a distraction in your house now, please bind and cast that distraction. Take that distraction to wait. Now after now, you meet the person or whatever is the distraction. Don't allow anything to distract you, please. It is very important. If you miss this, you will struggle the remaining course. And I may not have the time. By the time we start moving and start speaking the price language, you find it difficult. Please follow me. Okay. So we said once you have identified your support where you have multiple touches of price, at least 3 touches of price previously, that place is now your area of value or your support. It is now called support if the price is on top, above that your line or that zone you have drawn. But if it is below, it is resistance. You should be looking for opportunity to sell. If it is above, it is support. You should be looking for opportunity to buy. And I gave you the rule, which is on a slide. if the former support, if price breaks below the support, it has changed it to a resistance. What you need to do is that wait for a retest. This is what is called retest. If you look at this statement, say breakout below support, price has just broken the support. These 2 places or 3 places, it couldn't break the support. It could not. Now it came and broke the support at this point. Are you supposed to sell? We said, no, don't sell. Don't sell. Unless you want to scalp, but you don't know if this price will go back and continue the buy. For you to confirm that that thing has started selling, is that this market will come back and test this zone. It will come back and test this zone. At the point when it has tested it, now you are ready to kill the market for a sell. Then you should engage the market for your sell. That is a safe entry. A safe entry. Wait for a retest of that zone for you to confirm it to be a valid support or a valid resistance. Okay, I think I have this slide. Now look at the slide, look at resistance. If you look at this chart now, the up is the resistance, the down is the support. That is what we have just said. The up here is the resistance, and this is support. Now look at it on the chart again. Look at the price came here on my right. Price came here, came to this point. When it came to this point, the market was buying. If you don't understand that your support and resistance, you will rush and be buying at this point. But what happened? It got to a resistance. Something blocked it. It got a roof. It's just like you bouncing a ball. When you strike a ball with momentum, you hit the ball on the ground. What happened? It will move up with momentum to the roof. As it moving with speed, by the time it hits an obstacle, which is the roof, it will do what? It will come down. And where is it coming to? It's coming to the support. The ball will be doing that until it has lost momentum. That is what it will be doing. And that is what the price is doing. Price goes up, it comes down. It goes up, it comes down. It goes up, it comes down. That is what the price is doing. So your ability to identify this is what makes you a successful trader or a bad trader. Now, look at the resistance we have talked about. On this note, we want to go to our charts as we come back for that analysis. Now, what do we mean? Where is our support and resistance? Let me remove all these things. Let me remove all these things so that we understand. Okay, now this is, look at it, this is my chart now. This is my chart. This is a chart of Euro USD, sorry, Euro GBP. Okay, this is my chart. Look at how the price is. Some persons will get confused. Please, if you see a green candle, it means buy. If you see a red candle, it means sell. That is how I modified my chart. So many traders, that's what they do, but the color has nothing to do with your chart. It has nothing at all to do with your chart. Don't get it twisted. Nothing to do with your chart at all. You can decide to change it to default, black or white, anyone. You can change it, but it comes as black and white. But if you want to change it, you can change it to any of these colors. That when you see it on a glance, you just know that, okay, market is buying. On a glance, you know that the market is selling. All right, so now what you need to do, I've come to my chart. I want to trade Euro GBP. This says you're raising your hand. Don't worry, there is time to ask questions. We'll allow you time to ask questions. This says, please, Let's finish. You ask a question. We'll have like 15 minutes to ask questions. Don't worry. We'll take all your questions. The question is whether you have the strength to continue. We'll make it very snappy. Okay, now this is my chart. This is Euro GBP. I want to trade Euro GBP. What time frame is this? This is daily time frame. This is daily time frame. Now, what will I do? I will come here. I will shrink my chart. Why? Because I want to see what happened in the past. What happened in the past, so that it will give you an insight of what will happen currently. Now, I will shrink my chart. I will shrink it very well. I'll shrink it very well. By the time we start talking about native levels of price, you don't need to shrink your charts. But we're coming to that, don't worry. But now you shrink your chart. Look at this line that has been here, this line that has been here, this line. Have you seen that I drew this line? I think when I was taking intermediate class, when I was doing my analysis. Now look at it. This price here. Price, this is November 2020. The price came here. The price was selling from here. It got to this point. Market started buying. It came to this point again. This is August 2020. August, it went up. After a while, after how many months? This is November. This is October 2020. It came again to that same price. Market moved up. This is December. This is about December 2020. That is when market break below this zone. And since then, the market has been selling. Listen it. So now, if you have drawn this, at this point, this my result, this my support line or resistance line is no longer useful to me. I will remove it. It's not useful. Why? Because price has left that place. Look at where price is now. So my area of concern now is this place. No longer that place, no longer up. Is this area where price is. That is my area of concentration. Now, what will I do? I will come here. I'm going to remove all this so that we see clearly. We're waiting for you. Until it comes. Okay, now, what am I doing? This is where the current price is. Look at the current price here. Here is the current price. Now, what will I will shrink my charts. This is a daily time frame. Now, this daily time frame has just shown me what has happened since September 17th to September 17, 2020 to February 7th, 2022. Not February 7th, about that's today as at today. Today is February 17th, 2022. That is what is on my chart. But I will shrink it more. I will shrink it more. Now, I've shrunk it more now. What has it told me? It has told me that this one now is November 28, 2018. I want to see past history. November 28, 2018 to February 16th, 2022. Now count 2018, 2019, 2020, 2021, 2022. 5 years period. That is what is on my chart. I have shrunk it to get more. If I want to get more, I will still shrink again. If I want to get more data, I will still shrink. I will shrink it again. Now, what I have seen now is 2015. If you look at my date here, this date here is 24th of May, 2015. So February 16, 2022. 2022. That is what is on my chart. So I will look at what is price. What has price been doing? 2015. Somebody has unmuted. So now I will sit down on my chart, on my seat, and relax and be watching what has price been doing. Okay, now look at it. This point, price came to this point. This is what they call analysis. I told you, by the time I finish teaching you support and resistance, I teach you trend line, I teach you candlestick, and I teach you the native levels. If you have not funded a life account, I know what the problem is. That means you don't want to trade. Because by then you should be doing analysis and at least be taking entries. In fact, paste your charts and say, look, I want to buy this market, and help me analyze it if you are serious with what you're doing. Now look at it. Price came here. Look at the places. Price came to this point. This is 2016. Price did not break below. Price came again to this same zone. This is another one. This September 2016. Price did not break below. Price came again sometime around September 2016. Price did not break below. Price came again around January 2017. It did not break below. Instead, they pushed it up. All this while, price did not come close to this point. Price came again to this zone at, let me know the exact date so that we don't get it twisted. Now, this is December 2019. On December 2019, price came again to that zone. It did not break it. Price came here again sometime in January 2020. This is 2019. This is 2020. Price did not break below. And since then, price has not come to this level. Now look at it. I have marked, look at, I just took my horizontal line and put it somewhere around here and marked it. I have done first, I've surmounted one hurdle to identify my level. Now I will come to the current chart. I'll say, okay, price has not broken. Okay, that means where the price is now is a very, very, very strong level. I will come down. Look at this black line. Don't miss it. Let's go. Let's expand our chart so that we'll go and look at it. We'll see that black line. Look at the black line. We started from 2015. Started coming. Look at the black line. Now, this price came to this point. Let me expand this chart so that we understand. Look at it. Price came to that same line that I drew based on past action. As at when I marked this in, price has not come here. Look at price came here. This candlestick which price was selling, it got to this point. Immediately, they pushed it up. Buyers pushed it up. Why? Because price, this is a very strong level that price has not retested for how many months or how many years. Now, in which day is this? This is about Friday or so. Friday they just passed. Let me see. Let me see this candlestick. This candlestick is 3rd of February 2022. The 3rd of February 2022, price came to that zone. Immediately, it got rejected, left weak behind, telling you the strength of buyers. By the time we go to candlestick anatomy, when we'll be entering the theater to dissect candlestick, you will understand that this thing they call weak is the strength of the buyers. They pushed it away. Price started buying. Now it brought to this point. By the time we treat other block, I will show you what happened here. It got rejected to this point. It got rejected to this point. Now, the question is, will it come back to this zone that it has tested before? Our bias is that it's not coming back to this zone. Why? Because if you understand a trending market, which Ezine taught you, a trending market, which the person that taught you basic said, once the market moves, the market will come back and do
Please, let's just hold on. I believe network took me out. He'll be back in a jiffy. So just hang on. Let's you'll come back. Let me log in. All right, we're waiting for him. Okay, next. It comes back, I will log out. It's okay. I hope you can hear me.
Loud and clear.
Yes, we can hear you.
Okay, so let's go back to the charts he's using for analysis. Okay. So, check. Euro GBP. Okay. He's trying to tell us more about support and resistance. We've traced history where we had multiple touches. And we said to define a support or a resistance, you must have a minimum of 2 touch on a zone for you to identify it as a support or a resistance. Minimum 2 touch. That means price must have come to that level first. Unable to break it, it will come back to that level taking time. Unable to break that level, it's your duty to use your line, either your horizontal line or this one, unshade it. Shade that particular level that price has refused to break, your support or your resistance line. So using the Euro GBP compared to where price is now, We've traced it from the time of 2015, 2018, 2020, and all of that. You notice, let me not go far to that. Now, currently, the question is, where is the correct price now?
You're not seeing your screen.
Where is the correct price? This is, you cannot see my screen.
You're not seeing your screen.
Hello?
Yes, we
No,
didn't
we
share
can't
it.
see.
You have to share your screen.
Okay.
Share your screen so we can see.
Can you see it now?
It's coming up.
Can you see my screen now?
Not yet, it's coming up.
Okay.
Yes.
It's showing.
It's
You
showing
can see
now.
it.
Yes.
Yes, thank
Okay.
Yeah, you can see it.
So this is the same chart. Okay. Please mute your mic. Please mute your mic. Please. So like he was showing us, he has shown us, he has traced this level back to history. And we noticed that from 2015, 2020, till now, price has been touching that level. It can give it a distance of 10 years. Nobody cares. You can give it a distance of 2 months. You can give it a distance of even 1 hour. That's why where time frame comes in. Please, if you've been following me from basic, I emphasize so much on time frame. Why I said lower time frame for lower time for scalpers. Now, this support is defined by your time frame you are looking at. But in general, higher time frame controls lower time frame. Higher time frame controls lower time frame. So that distance of price coming back to a support or a resistance can be between 1 hour, it can be 2 days, it can be 5 years, it can be months. What is important is, have you marked that level as a price, as a level where price has refused to break below or above? That forms your support based on that time frame. So you're trading based on that time frame. So currently, this is where price is compared to the current market price, which is here. He was using daily time frame. Daily time frame. And he traced here. You can see that at this level, because in the past we have had maximum of more than one touch. Now look at when he was showing, he said price came to a level where it touched around 215 before this candle. We saw this candle in one day. This candle made almost 200 points just because you identified a level of support, a key value, a level where price has touched multiple times. And now price is back to that level. Now, another thing you also must identify is that support is a zone. It's not just a number. It's not just one line. No, most people just use one line and draw their support and say, here is your support. No, it's not just a number. What you use to identify your support is when he starts teaching you the native level of price, you understand better. There's what we call the closing of a candlestick. There's what we call the opening of a candlestick. There's what we call the wick of a candlestick. And there's what we call the lowest, the opening, close, high and low of a candlestick. Now the question is, if currently, which candlestick touch, okay, we know that this zone is our area of support. Now, which candlestick had the lowest dip on that support? I don't want to trace the back to 15 years back or 5 years back or 1 year back. Let's just do it according to the current market price, currently what price is doing. So with this recent support, which of these candlestick touch the lowest low in that support? You can see it's this bullish candlestick. Now you have to mark from the close opening. This is the bullish candle. So the opening of this candle is from here. It's from here to the wick of the candlestick. To the wick of you can project it to any, because we know that price in the next 1 month, price will get to this place. But we've identified this level from the opening of that candlestick to that lowest price it got to. Now you can project it back. If you project this back, I'll change this to weekly time frame so that you appreciate what we're doing. Now let's see weekly time frame. On weekly time frame, this is what I want to get. You will see that this level is a level of interest. You can see how many times price has been coming here. Remember, I'm using the lowest wick, the opening price in that candle, and the lowest wick that touched that level. Now, if you check what happened here, obviously price was coming from somewhere. I don't want to trace too back. Price, look at what price did. All of 4. 1, 2, 3, 4. This will be up to, this is how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 weeks. 21 weeks should be around, let's say 3 or 4 months, I don't know. For good 4 months, market sold massively. Now came to this support and did what? And reversed. And did a little of this. For a week, it bought, because this is weekly time, that's one candlestick, 1 week. Now 1 week, really touched this level. Now if you trace back, you see that this level is a level of support previously. Now price after 21 weeks, it came to that level, bounced back with a strong bullish, buyers pushed it back. Now it took almost I said 4 more weeks, not more than, because it's more than 4 candles. After 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 12 candles again for price to come back to that same. Remember, we marked the wick of that candle. That's the candle. When we say candle wick, we mean the tiny part of the candle. You will learn about candlestick, don't worry. The tiny part of the candle, because the candle has body and the wick. Now, the wick of the candle and to the opening of that candle is where I'm at. So price came back to that again after like 12 weeks. What happened? This is what happened. For just 1, 2, 3, 4, for 4 good weeks, market bought massively. Massive, like it bought and even bought almost to the high. Now look at resistance. This created an initial resistance. Look at when this market started buying. What happened? It bought back that resistance. Now what did I do? Remember I said if you are marking your resistance, if I choose to mark this resistance, now I will mark the whole of this place. The wick of that candlestick and the close of the candlestick, that last candlestick that touched that zone. What happened? Price bought massively back this initial resistance. Price bought back it. Left a week. I created a week. Started selling. So all these ones now, you in between support and resistance, there are minor support and resistance too. There is, if you just by me looking at it, you see the major support and resistance. That is very obvious. In between those support and resistance too, there are still minor ones. That defines, that's why I said it will define both the long trend, that's what we call the short-term trend, the mid-term trend, and the long-term trend. So in between support and resistance, there are other minor support and resistances. And this happened, it showed for weeks. He bought again. Look at it. After some weeks, he bought again into that resistance. And this happened. He bought again to that resistance before all of this. This sell has taken this weekly time frame. This sell has taken close to this December 20. No, let me see. This is okay. December 12,
Most
20. Yes, 20th of December. Sorry, okay. That's since 20th of December. This has been selling till now. Hello? Can someone hear me?
Yes,
Okay. So now this happened. Now look at it. Why did I mark the wick of this candle? It shows you that support or resistance is not just a line, but a zone. What it means by a zone is that, remember, anywhere in this chart has price. Anywhere in this chart has price. Now look at it. I marked the body to the wick to that point it touched the high of that resistance. What it means that this between the lower boundary of this my black board or black whatever box, between the lower boundary and the upper boundary, there are values. Just like saying is the value there is between 500 to 700. It depends on the height of resistance that market created, or the height of the wick that the market left. Some might go as 50 points difference. Some might go as 200 points difference. Some might even go, I've seen a chart that went up to 800 different because of the long wick. After now, we'll show you EuroChef. Because of the long wick that the market created, up to 800 different. Now, can you use up to that? What it means is that markets can decide to come inside this box. Anywhere inside this box, it can enter inside as long as it has not taken out this wick. It's still your resistance. Now, if you're selling anywhere from here, if you choose, because we know that resistance is an area of sell. Let's say you entered immediately, this price was coming to this place. You picked a sell just here. Remember, if you pick a sell at this price somewhere here, at the lower boundary of this edge, market just came there, you picked a price, and the market starts continue buying. By that time, you'll be on drawdown and you will panic, especially for someone that does not understand where the height of the resistance has gotten to. Because if his market is still buying inside this box, you say, oh, this resistance has been taken out, it has been validated. It has not been invalidated because this is the height of the resistance. Now, everything that depends on the lot size you used and what you want to risk. Normally, for this height, because we know that the height of between here and here is the value or is the range of that resistance. That means let's see how many pips. Let's see how many pips. Okay, it's almost 280. Let's say 282 pips. Let's even call it 300 pips. Now this question, can you risk 300 pips? Because you entered here, inside here. You entered at the edge of this thing. From here to here has taken us 300 pips. And me, the way I trade, even if I'm using here as my stop loss, I won't use exactly the tip or the height of this wick. I will use some pips. I will add like 10 pips above it, because sometimes when they say a retest of a zone, sometimes that same market that wants to sell will come as far as coming close to this wick and give you another rejection. Sometimes they can trick you like that. Market makers, they want to just to panic you or to take stop loss, because they know that people will put their stop loss at the tip of this wick. Now, the range of this value is 300. Obviously, as a day trader, you can't even imagine risking 300. People that can risk 300 on a trade is people, one, you have volume. Secondly, of course, you should know the use of your lot size. Secondly, thirdly, you are more like a trend, a swing trader or a position trader. That means you just, anywhere you enter around here, you put your sell, you use some value above this week as your stop loss, you go and sleep. What it means that even if this market starts to buy and buy and buy and buy inside this box, as long as it has not taken out the week or the height of this resistance, the market is still valid. It has not invalidated that resistance because it's still on that resistance zone. That means it can buy and give you drawdown. When it's buying, it's giving you minus because you are selling and market is buying up. Obviously, you'll be on minus, which is what we call drawdown. But it's not a loss yet. When it becomes a loss is if it takes out that your resistance, if you invalidate it and continue buying, they now hit your stop loss. It will close you out on loss. That is your own loss because that's where your risk management comes in. Before you put that stop loss, then you already calculated that if this market goes against me, that's why I say for someone to use 300 pips as stop loss, the person should know how much he has in his account. If it's someone that has more accounts, you can't even try it. Highest you can use is 30, 40, 50, highest 100. I mean, normally what I use for my stop loss is, anyway, I'm entering, it should not exceed, it should not, I don't like using small stop loss because I'm a swing trader. I use stop loss from 70 to 100, highest 120. Highest 120 stop loss pips. But short-term traders look at 20, 30, 40. It depends on your type of trade. So if this happens, that's when your resistance has been invalidated. But look at it. When it came back to this zone, what it did was just to touch, go entered a little in this zone or this range, just entered a little. And since that time, look at sell. For over how many weeks? Market has been selling, 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 selling. Now, it even broke. Look at this. This was an initial support too. This too was an initial support. Why did I call here a support? Trace it back. Trace it back. You see that market has once respected this range too. But let's not talk about this. This one is support inside range, inside a swing. Okay, those are minor supports compared to the major one that is very obvious. And now look at when it started selling, market broke this level. No even see him. Break them. Now, when he was telling you a break and retest, when he broke it, he didn't just continue. Look at it, project it. When he broke it, he broke it with this level. What happened? Market came back to retest that zone. It dropped. Even how many times it has retested? Sometimes market can retest it with a candle, with a swing. When you say a swing, I mean more than 1 or 2 or 3 candles coming back to a zone to retest it. Also, market can retest a zone with the wick of a candle. That's candle wick, which is what he did here. Candle came here, got rejected. Even the third time, got rejected, and all of this. Now, the question is, where is the current market price compared to support and resistance? Remember, we projected this behind us or backwards. We've seen how many times market has retested that zone. Now, this on weekly time frame, you can see that currently price has come back to this zone. And now I'm using the wick of this candle, the opening of this candlestick and the lowest wick, you touch on that zone. Now let's see the range of that support. Remember, the range of this resistance was around 300. Let's see the range of this support. This is, okay, very short. This is around 32. This is, okay, let's say 40. This is the range of the support is 40. Now, 2 things. How do I trade this kind of market, or should I buy? Because everything you'll be learning in your intermediate is, after the analysis, where should I buy? Where should I sell? Where should I take my profit? Where should I take loss? Where should I close my trade? All that matters in intermediate is buy and sell. Entry and exit. That's all you'll be learning. Anything they're teaching you, support and resistance is for your entry, is for your exit. Now the entry is either your buy or sell. Your exit can be profit taking or loss taking. Remember, we don't always talk about, it's not always about profit. Most times we talk about loss even before profit. Yes, you need to protect your account before thinking of making money in this business, because you must take something to, your stop loss is what you take to make a profit. Okay, remember our risk management. We will still learn about risk as we go on. So now the range of this support is what? 30, almost, let's say 40 pips, based on the opening and the closing of this candle. What that means is that immediately then you can choose a price. He will teach you about psychological numbers. Now you can decide to choose a price. At what price should I buy here? Just like I will always tell you, every human has a psychological number or psychological zero with our head, in our head. Currently, price is at 0.83391. Remember, the last one is your pipette. The other one, pip, starts from 9. So now the question is, what is the next psychological number closest to this support? That's another question you now ask yourself. How do you get it? Just know the current market price, pick your line, drop on that support. If you drop it, you double click on that line, then right click. It will bring out the properties of the line. You click on horizontal line properties, click on it. Now the question is, what is the number around that area? Now you can decide to type any psychological number. This is 0.83. Let's say 0.8, let's say 0.83,000. So what do you mean? How do you do it? Just type your 83,000. Then okay. Okay, I want to delete the other black line so that you can see the 0.83,000. Let me delete this. Now look at it. Look at this. Look at our 0.83,000 is here. Price is yet to touch it, which is in the middle of this week. Let me enlarge this so you see what I'm saying. Now this is our 0.83,000. Is a psychological number around here, right? And this is in the middle of inside our support. Remember, our support starts based on this. This is the last candlestick that have touched this zone currently. Maybe if you trace past, there is another one, but currently this is the last one that have touched it currently. So I'm using the opening is a bullish candle, so it opened here, and this is the lowest price it got to. So I'm using the whole of this as my support range, right? So now look at my 83,000 is in the middle of this range. So as a trader that wants to buy at this support, now you've identified, remember the first one is to identify your support. Now as a trader that wants to buy at this support, you've identified your support, you've identified a psychological number around that support. You can decide to say, I am buying Euro GBP. Remember, if you go to market to buy a pair of shoes and you come back, be it a woman or a man, your wife or your husband asks you, how much did you buy this pair of shoes? There's a price tag to it. There is a price. You can say, depending on whatever you bought, the price you bought it. I bought it for 4,000. If you go to market, they ask you how much did you buy, you say you don't know. That means nobody you buy them. So don't look at this chart differently. Like I'm buying and sell. They ask you. I went to eat yesterday in the fast food, and a girl came in. She was sharing these flyers, and she said she works with an academy forest. She was just talking plenty. She was just talking plenty, and because I was with my colleague, and my colleague asked him, "What's the current price of?" Of course, there are some popular currencies that you should just know, like Euro, USD card. As a trader, gold, all those things you should know. Oil, you can't tell me you're a trader and they ask you, what's the current price of oil today? 1 barrel of oil, you say you don't know. Nobody is telling you to give the exact figure. But as a trader that look at your chart on daily basis, there are things that you should just know. So some people trade, they don't even know the price of where they bought or sold, which is very wrong. This thing I'm telling you can't get it anywhere. Search your books. So it's something you should know. We are okay at 83,000. That's the exchange rate. You can put your price for those of we learned about pending price in our intermediate. You can decide to say, I'm waiting for Euro GBP at 83,000. Forget the 0 point or whatever. We understand that there's a 0 before it. Don't worry. Whether you call it 83, 88, 3, what's it called? Whether you call it 830, you call it 83,000, or you call it 0.83, whatever you want to call it, I don't know. But what I know is that I will just put my 00 and call it anything I want to call it. I know what I'm saying. Okay, you can decide to say 0.83, 0. Or 830 or 83,000 or whatever it is. You just know that you understand the figure you're saying. Okay, so as someone that wants to trade a support level, you can wait for your price here. Now, if you're waiting for your price here, where is your stop loss? This is your support of interest. If you go below, there are other supports below support, or we are not interested in those ones. Before price will leave here, before price will meet those supports, it must first of all break this one, invalidate this one. And when it invalidates this one, it can now trace back to history. But we can't go there when our support is still valid. So for the fact that I want to trade this support level, all I do is that I identified it based on, I've traced it back. There has been multiple of touches of price on that level, 2, 3, 4, 5, 6, back in the history. And currently price is approaching that level. It's not necessary. I'm just telling you about psychological number. Some people will not teach you what's it called, support and resistance with psychological number. So person can just tell you buy anywhere, as long as it's support, just buy. But me, as with the kind of experience I have, I should know where I want to enter, because I understand that anybody that wants to buy anything will buy it in, not in fractions. That is how it is, naturally. So I brought that idea into chart as well. So knowing that price might come to, my first interest is my support. Now my psychological number around my support. Then my risk is some pips. Thank God that this support does not even have a large range. Now, if I'm buying here, my range will be less than 30 pips. So all I just need is, I'll just add, let me even see what is left. This is from my entry point to, that is about 19, okay, let's say 20 pips. I can decide to add more 20 pips to this week, or 10 pips or whatever, to whatever I have here. That will bring about 40 pips, let's say 40 pips stop loss. That will be my stop loss. This is my entry point, 83,000. That means anything this thing want to do, let it do. Even if it shows me, see this small wick is creating. If you go to, this is weekly. If you go to lower time frame, you see it as a small buy. I am not in those, I'm not interested in that small buy. This is what I want to see. I want anything he wants to do. Let price come here and touch 83,000. Let price come here and touch it. Anything he wants to do, this is what I want to do, because that is my entry point. This market, what makes you unique and what makes you a trader is your entry. If you get a good entry, oh God, you'll be happy that you're a trader. They call you a trader, you'll be proud to answer a trader, because you know what you're doing. What is this thing? I like it. Now, this is anything that this market wants to do, you don't care. What you know is that I want price to touch 83,000. Two things, it can touch it and create and leave a week and gets rejected. When it gets rejected, it will give you what we call hammer. You can leave a candle like this. Don't worry, when you start learning candlestick, you'll learn about this. It can give you something like this. To put it in the middle of this. You can just put, doesn't want to stay in the middle. Whatever, you just understand what I'm saying. It will create a hammer by touch. After touching, you can touch this 83,000, still go lower to touch the week of this week. You can even go lower and hit your stop loss. You already know that what I'm risking is 40 pips. And if I have $100 in my account, I'm trading with 0.01. That 40 pips is just $4. Now I'm risking 40 pips to gain. You can decide to take your profit anywhere, depending on the structure. Remember, profit taking is still based on the structure in the market. But we'll come to that. Let's talk of loss before profit. Now, it can come and give you this week, just touch this 83 and gets rejected. At that point, you can be confident. That is when we can now say we can break even. As long as this thing has happened based on this time frame, all you need to do, that place you place your stop loss before, you adjust it and place in your entry, lock your entry and allow the market. From there, from this level, this market can give you another candlestick like this. This candlestick in one week did over, okay, around 180 pips, which is let's say, okay, around 180 pips in 1 week. Okay, it can do like this for 4 weeks. It can do like this for 2 weeks. It can do like that for, I don't know, we don't know what the economy will say, or any crisis that will happen, or whatever will happen between Euro and GB. Don't care to know. All we know is that we have gotten an entry. That is all we care to know. We have gotten an entry to buy Euro GBP at the exchange rate of 83,000 or 830 or whatever you want to call it. Now from there, it can start going up, go to 84, 85, 86, 87, just like that, 88, 89, 90, just continue like that. We don't know, but what we know is that it can decide that 83,000 can be a change of trend for Euro GBP. It can't say. It can do something like this again. It can come back and do something like this and buy for massively for weeks. You don't know. You can see this struggle against this trend. Can decide to do like this for 2 weeks. This, if he buys like this from here to back to this resistance, that's over close to 1,000 pips. That is close to 1,000 pips. That means if you have up to, let's say, $1,000 in your account, and you were able to trade it with 0.1, and immediately the market moves, you lock your profit, and you're able to capture 5. Euro GBP can make 500 pips in 2 days. The day he wants to be very aggressive. Euro GBP, it can make 500, 300 pips in 2 days. And you're able to capture 300 pips, 400 pips from a very aggressive move. That's like 400 or 300 or whatever dollars, depending. It can be 100 pips in 1 day. It can be 150, it can be 200. It just depends on the aggressiveness or the volume that entered that market that day. And Euro GBP has volume. So that's how to trade support and resistance. Your own is to identify that level of interest by multiple touches of price. Then know the levels that you know. Once, that is why we said in this market, you don't hope, you trade what you see. Now, if price, that is the essence of your stop loss. If price has taken out that support or that resistance, please exit, accept your loss. This market, you don't need to say, I won't, it will reverse. You are not the one to reverse it. Prayer yourself cannot reverse it. Whether you're a Muslim or a Christian, call Allah from now till next year. Allah cannot reverse this market. I'm not trying to be funny, but then it's not a market of prayer. It's a market of reality. What is happening? And what tells you what is happening is your chart. You have to be friendly with your chart. So immediately invalidate that support or that resistance. Don't hope that it will come back. Take your loss, then look for, and not there are, like I always tell you, there are over 300 pairs you can be traded, that can be traded. So you will see another opportunity somewhere that will give you good money, even pay for that loss, even give you profits on top. Even that same market can come back to that zone and you will take it. It's better you take your loss, just like in the morning. I don't know if you were in the group. Yes, it was this group. I posted gold sell. I entered that gold around 3. Yes, I was already on profit. The mistake I did was that I didn't even lock my profits because the gold entered the other block on H4. Okay, there's one small candle that sold around 4, 5, 6. I was on profit on that, almost $12. That was when I posted it. but I didn't lock my profit because I was avoiding market coming to spike it, then continue. Then when I woke up around 6, I saw someone posted one thing like that, but I doubt that news. But when I woke up, price has gone above my entry point. I was already on $10 minus, I mean $12. And I looked at it, I said, for it to have taken this other block out, this will continue up. At least it will get back to, that was at, I posted it at 1850. I said, sell at 1850. It has taken at 1850, getting to 1870, 18, close to, yes, 1870 or so. I had to take my loss. And I know for it to have taken its price is going back to 18,900. That's 1,900, yes, 1,900 for gold. That because that is the next area of value. That's the next area of resistance for gold. I just knew that it's getting to 1,900. So I had to take my loss. I didn't start hoping. If I'd hoped from that $10 minus, it would have taken up to more than $80. For what? When I can always wait for it at another high and re-enter it and make profit from there. So it's better I take my loss early and wait for it at another zone. You don't have to start waiting. Oh, why would I take that loss and wait for price again? That's the best way to trade. Else, if you let me hold on to it, it can take out all your money. So that is the essence of knowing when to take your loss and when to take your profit as well. I'll wait for it. If God doesn't sell this night, it will sure sell tomorrow. So I'll wait for it at that 18,900. I mean, that's 1,900. That's where I'm waiting for good, because that's the next level of resistance. It only took me $10. If gold starts selling from there, I will make over more than $80 from it. Yes, if it starts selling from there, I will make over $80 from it, because I know where I will take my profit. Once it starts selling, it will bleed. So that is how to actually trade support and resistance. Identify your level by multiple touches. Know the opening and the closing of the candlestick that touch last on that zone. Know that is a range. Okay, price can decide to fall inside the range of that, go inside the range of that value, depending on the range. Some might get it up to 200, 300, depending. Some might just be 20, some might just be 50, but just know where you are entering, where you are buying. You don't just buy anywhere in the chart because you're seeing a green candle, you're buying. Okay, this is weekly. This is weekly. Go to head point, see that off, or let me say 15 minutes. Now on 15 minutes, look at it. You can see that already it has started buying. That's why I said shorter time frame for short-term traders. Someone that has identified that as a support might have gotten in here and might have captured some pips. Even one candle is enough for the person. This is almost 12 pips, okay? Not so much, but then as a scalper, if you have big money in your account and you scalped it with what's it called, with one standard lot, that's like $150. You can decide to exit. But that's why I said for you to be a scalper, you must have volume that will allow you to trade up to standard lot, one standard, so that even 10 pips you can exit the market, even 5 pips, because you are looking at short movement. Now in 15 minutes, you can see that it has started buying. I am not interested in that buy because price has not gotten to that my entry price. So I'll rather wait for price. I know that these ones are just short buy. It does not, you can see that the candles are very small. It does not even have strength to go up. So my own is that anything it wants to do, let it finish. When it finish and touch that my price, is my entry price. I am buying there. I am not moved by, you won't allow your emotions to control you in this market. That you are seeing all of this, you said, oh, and you know that you have a target and price has not gotten to your target. Now because you are seeing green candle, you say, oh, it's fine, let me buy. If you buy on lower time frame, know that you are just looking for short pip, like short-term movement, which can be 10 pips. If you see that 10 pips, please exit, because that is not the major trend. Price has not completed what it wants to do. Price is measured. If they say price will get to a particular level before it will reverse, anything he wants to do, price must get to that level. Why? Because the volume that is entering is pushing it to that level. Your own 0.01, 0.02, one standard lot, 10 standard cannot do anything to price. The only time it will do anything to price is if it's in the direction of that price. If it's in the direction of market, that's when you make profit. If you like use 20 standard lot and you're against the direction, it will swallow it because they have a measured price where price will get before they will peak, for it to peak, which has shown technically, we have shown you that there are levels of interest, both for retail traders, both for investors, both for institutional traders, both for everybody. There are levels of interest that matters to everybody that is trading. So those levels of interest is what you also as a retail trader needs to identify. When you identify it, you know that this is where I am entering for a buy or for a sell. This is 9:52. Let me take your questions before we exit.
Hello, ma'am.
Yes. Yes.
Hello.
Yes,
Please,
I can hear you.
This range of support. This range of support, can you please throw more light on range of support?
Okay. Let me look for another pair. Let me look for another pair. Okay, this is CAD JPY. I'm still on this cell. I'm still on this cell. Let me look for CAD. Okay. Okay, I think this is 15 minutes. I don't like using lower time frame. Okay, let me just use this. Now look at, I joined a cell today, but then it gave me a drawdown. I'm not bothered because my stop loss is somewhere above here. It's almost back to my entry. But this is not my problem. Now, let me use this. Let me assume that I'm taking here as my resistance. My range of resistance will be from the wick of this candle, which is why this is because this is the last candle that touched this level based on the current market price. If you trace it back, it must have touched. But based on the current resistance I'm seeing now, this is the last candle that touched, that is in this level. Now I want to use the range of this candle, which is the wick of this candle and the closing price, or the opening price of, because this is a bearish candle, so the opening price is up, which is the body of this candle. So this will be the range of this, my resistance, if price is coming here. So if I want to sell at this resistance, what it means is that price can come inside this range. That means price can buy to this, the lower boundary of this range. It can buy to the lower boundary of this range. It can enter inside. But the only time I know that this price has been taken out is when candlestick has closed above this, my range. By then, remember, I have a stop loss somewhere around here. But when price has closed above this, my range, that is the only time I can say that this resistance has been invalidated. I can take my loss. But as long as price is still dancing around this inside, it can be dancing inside here. I have my stop loss. My stop loss has been able to hold my emotion, not to, because if I see price buy massively coming here, I might get scared or get agitated and close the trade. Why? Because I don't have stop loss. I don't even know what the candle wants to do. It might come inside here and get rejected and leave weak for me. I don't know. All I know is that if I have a stop loss, my mind is at rest. All these trades, I'm on trade, I'm teaching. Why? Because I have stop loss. I am not checking my chart every 5 minutes. I already know what I want to risk on a particular trade, and I put my stop loss. I'm okay. Anything price want to do, let it do. Okay, so it can come inside here and get rejected and start selling massively. But all I know is that I have my stop loss in place, right? So, but this range until there's a candle that closes above this range is when I can say that this resistance has been invalidated. So I'm using the body, which is the opening price of this candle, and the highest wick, that is where the candle touch last, as my range of resistance. The same way, if you are looking at it down, you will use it as your range of support. Madam, is it understood? Cynthia, Madam Cynthia. Hello?
It's okay, ma. Hello, I've gotten you, ma.
Okay. Any other question? Hello? Any question? I want to show you something. I believe there is no other question. That means we understood. Am I correct? Someone should say something.
Yes, you are correct.
Yes, yes,
It's
yes.
very clear. How many of you
Yes.
have downloaded your platform? How many of you have downloaded your app? Is there
All of
anybody that have not opened an account? Is there anybody that have not downloaded the platform? Because I will always tell you, if this is because it's online class, if it's offline, by now you have funded your account. I can't teach you without funding. That's just the truth. Because if we are seeing trade and it's just going, because we know why. If you are using demo, you won't be serious. You think we're just telling story. It's after teaching, you now want to go and practice, you forget everything. Trading is a practical class. It's not, there's the handbook is because some of you will miss classes, some of you because of network, your internet will take you out, and some of you because we are not seeing, you need something to guide you. That is why you need the handbook. So you need the handbook to also, when you read support and resistance, you check here before you go back to your chart. You need the handbook. But in the other way, as we are doing it, as you're reading it, you need to be practicing it immediately. So that's why we are not even so disturbing you. It's online class. First, you have to do it with your demo, so that while you're practicing, you are getting used to it. As time in the mid of this class, you should be funding accounts. So that you are doing it, you are saying, I'm on trade, I'm teaching you. If I see such opportunity, why won't you take the same trade and make profit while you're learning? That's the essence. So please prepare that, have that at the back of your mind. The material, the intermediate material is very, very comprehensive. Very comprehensive. It's not internet material. No, it's gotten from chat experience, from what we've experienced. We're able to compile notes together so that when you read it, it will be in the simplest form. You can understand it immediately. As you're reading it, you're already getting it. It's sinking. After the class, you go back to read your handouts, it will sink. I believe you me. So that's why we were able to make up that handout for you. So if you have your money, chat me off for your handouts so you can support your learning. But please, the most important one is download your platform, register your account. If possible, if you have spare money, put $50. I'm not saying you should trade it. It's your money. You can withdraw it anytime. It's your money. If possible, put $50. As we are teaching, if I wake up in the morning around 6 and I see profitable trade, I will post it. If you understand the little things we're already teaching, you take your trade and make profits. While you're still learning, nobody is going to ease your profit. When you make it, you can withdraw it. Even if it's $10, it's money. $10 is around $4,000. It's something. $20 is around 8,000 to 9,000. It's something. You can withdraw it. It's your money. So while we're teaching, if you have money, you can deposit. It's your money. Nobody is taking it from you. If you say you want to, at the mid of this class, after a week in this intermediate, everybody should be funded. No funding, no continuation. No funding, no continuation. If you must learn everything we are teaching you before we go to advanced, which is, remember, technical is where should I buy, which is what we are teaching you now. We've taught you support, we'll teach you another thing tomorrow. The fundamental is why should I buy? That's what fundamental. See, Forex is not a joke. is complex, but we tried as much as possible to simplify it even to a baby. Ordinarily, forest is complex. Even when I remember when I was learning, for 6 months, I didn't even, because even people that was teaching me, it's as if they didn't even know what they were teaching me. So they made it so complex that me, after 6 months, I was not able to identify support me that is teaching you now. So it was not easy for me either. But because of experience and practices, we look at our chart every day, we trade it every day. It has become much simpler. And he said, if you can't explain it to a new baby, that means you don't know it. I can explain it even to a baby they give birth to today. Why? Because it's now part of me. So it's something you can understand, and we've made it much, much simpler for you by giving you a handout and by simplifying it in the chat for you. So please get your handouts, prepare for your phone in the class. Thing that needs this, or the link, so that you can knowledge for themselves. Okay.
I'm here to, Cynthia speaking, my empty phone, I'm still struggling with it though.
You're still struggling with what?
The MT4, you wanted to help assist me the other day, but we couldn't do it.
Okay, madam. Okay, let's see. Maybe tomorrow in the office. I'm very tired now, please. Maybe
okay,
tomorrow.
Sure,
please remind me again tomorrow, please.
Around what time, ma'am?
Anytime from 9.
Okay.
All right. So I hope there is no more question. If you need your hand, we'll chat me. Thank you, everyone, and good night. Your class continues on. Today is Thursday. We have basic that is starting tomorrow by this time. So you won't have class again tomorrow. Your class continues by Monday. This class continues by Monday. So use this weekend, do your registration, download, if possible, get your manual and start reading. By Monday, I think we should be talking about candlesticks on Monday, or trend line, depending on the topic, depending on who will be teaching you. On Monday, we'll be talking about a different thing. Please use this weekend to get your handbook, then download your platform and study. On Monday, we'll continue your class. So thank you, everyone. See you again next week.
Thank you, madam.
Thank you, ma.
You're welcome.
Nako.
Thank you.
Yeah.
Thank you. God bless you.
Bless you too.